weekend all. Ira Epstein of Linn & Associates with your metals market update, but this is your weekend edition for the weekend of March 22nd. This is Friday, 2019. You know, pretty interesting ever since Wednesday when the FOMC came out and Fed Chair Powell basically via the dot plot, there's no planned rate hikes this year, and in fact the balance sheet runoff is going to end. Well, to make a long story short, he started talking also about the weakness in China and Europe, and lo and behold, within 3 days now, the Bund, the 10-year Bund, that's the German equivalent of our 10-year note, down to a minus 0.3%. So if you give them money for 10 years, expect to get back, not face value, 0.3 less than that, no interest earned at all. In the U.S., the 10-year notes collapsing down to 2.435, right in that general area as to what they're doing. And the market is watching inversions take place in curve yield, which is often a prelude to the market turning down via a recession. Now, it doesn't happen right away. It happens, this curve yield inversion often takes time to get going once it inverts, and it's got to stay inverted, but if it does, it's got a pretty good track record since 1975 of calling the market downturns. Gold looked at that today, gained on the day. The Japanese yen gained on the day, and the bonds and notes. What does that tell you, folks, as you see the stock market down? People ran to safe havens. That's where they're at right now. So when we go to a monthly gold chart, remember this is our weekend edition, so we're going to look at a monthly chart, then we're going to go to weekly charts. On the monthly, you have this huge sideways action. What I promise you is the bulls are praying this market will pop through the 1353, then the 1370 Bollinger Band, close over that and start an outside breakout of this base. The bears, of course, hope that the market gets back under 1161.5 and you get a total collapse. So you're in that area of what the market's doing or trying to do. When you look at slow stochastics on the weekly and monthly chart, they don't get overbought as the way that I teach charting. They're either pointing up, pointing down, or going sideways. Momentum is still pointing up on this chart. The bias is up because you're over the 18-week. And if you were to take out last month, I keep saying week, this is a monthly chart, last month's high, and that number was 1344, you'd even turn the swing line up. So what the bulls need to do is get that done, and what the bears want to do is keep the market from doing that and get it back under the 18-week average. That's what a sideways market is. The weekly area chart of closes has been friendly, and it's been that way since November, when the market first cut back over it, challenged that number, and has stayed over it ever since. And with it, on a close, you can see how gold has continued to rise. When you take a look at the current weekly chart, what you've got here is a market that's flip-flopping. If you're trying to catch these plays, unless your timing's perfect, if you're buying the rally, you're getting hurt. If you're selling the break, it's coming back on you. When you put the swing line on, you see why. You have a higher high, a lower low. That is not a trend. When we put moving averages on first, the 18-week, the 100-week, and the 200-week, that's this gray one down here, you had a bullish crossover right through here. See the green and the red, and now they cross over. That often spells that the market wants to get a push to the upside, and that's what's been going on right now. When you look at where the Bollinger Bands are, think of this as a resistance number. This is a support number. Because the market got away from it, it's pretty formidable resistance at that number we were just talking about on the monthly chart, 1349. I think we were talking 1344 as we were on that one. Support back at the 1284 to 1274 level, and momentum down. So you've got divergence going on here. You don't have momentum with the bias of the market, and you don't have a trend just yet setting in. In the gold-silver ratio, it just flattened and riding here at the 85 level. Now, when you come to GLD, which is the popular ETF for gold, first thing my eye goes to is we're still pointing down in momentum like the futures. The second thing, just like the futures, you got the higher high, lower low, and you did have a bullish crossover. Still have a market looking for to set in a direction per se. When we go to GDX, which is the gold miners, you have a pattern of lower highs, lower lows. So the trend is defined by the swing line is down. It is countered completely by the fact that the market is over the 18-week average, which means the bias is up. When that occurs, the two fight each other, and I say you're neutral. Now, what could turn this up on the weekly basis, because you're already over the 18-week, would be getting over 2297. That would then potentially give you the pattern of higher lows, higher highs. I think you'll also see the 100-week average is acting as the support. The market's not going back, at least yet, to the 18-week average. Get over this 2297, and I think traders will be talking about 2365. In the silver market, similar to gold, you've had on the longer charts, the weekly, lower highs, lower lows. Now for 2 weeks in a row, you have stayed over the 18-week average of closes. Is silver a precious metal, industrial metal? That'll be the question. For the bears, any close that gets under the 18-week average now will add to the bearishness. You've already got the swing line down. That would give the bias down, and momentum's already turning down. So the onus is on the bear if he wants the market to keep and get this market down $13. What about the bull? Well, under this pattern, you have to, in some manner in the short term, take out this week's low and then the high to get the swing line with higher lows, higher highs. Even if you just soared over 1619, you can't get away from, on the pattern, a lower low, higher high. So a little more difficult. The copper market, when we saw all this world interest rates go down and the talk of recession and so on, copper got clobbered. Today especially. You were down 630 points for the week, but a huge part of that is just now. You've got the lower highs, lower lows. Prior to this, the battleground was the 100-week average. Now with this action, that's going to be what was support often becomes resistance, and possibly the market wants to head back to the 278 area to see where its legs are. Maybe that's the way to call it. Am I bearish? No, because you're over the 18-week average of closes. But momentum is pointing down. So instead of sideways as it had been, it's now taken a bent to the downside. Certainly if the U.S. and China made a deal, that would overnight change the chart picture, potentially at least, but I don't see that happening right away. We do have, remember, our Secretary of the Treasury and our head negotiator now. I think next week they'll be in China, so you got to pay attention to that. I think they're due just a matter of 4 days or so. The platinum market, higher lows, higher highs, bullish. What would you call the upside target? I'd say the upper Bollinger Band is your first resistance, and that number came in at 861. Where'd you finish? You got through that. You got up as high as 876. That was good enough to stop the rally. You're at 847.5, but in an uptrend. In the palladium market, the daily charts lost their embedded reading, just as a point. And that often means prices coming back to the 18-day average to recoup. On the weekly charts, though, you're still very bullish, and you've been in this bullish pattern, folks, since August of a year ago. And if the market has just gone up and zoomed in price, there'll be a point where you have to ask yourself, okay, if everybody's nervous about world economies, have some of these prices gotten ahead of themselves? That'll be the big question. The other question is not a lot of supply of this. In the dollar index is just whipping back and forth sideways in these weekly Bollinger Bands. Not a real trend. You've got the higher high, the lower low. It's trying to get back to the 18-week average. It's a whipsaw, and rightly so. You get one piece of news that might sound bearish for the dollar. Gee, we're not going to raise interest rates. If Europe will raise theirs and China do stimulus, why is the dollar going to stay strong? Versus everybody else is doing so bad today that the dollar wins by default. Which side of the coin do you want to bet on? And the chart is saying that. There's just no trend in it at this point in time. You know, one of the things I have the best time doing, and I ask you often, Is there something you want me to do? And you'll write me, be it if you're watching YouTube, or I get emails at Epstein@Linn LLC, and people ask me and I respond. Well, one of the things they wanted me to do is in my review of the charts each morning, which I was starting to record at 8:30 a.m. Central Time, people want it a lot earlier so that they're trading as the markets are going, as they're taking their first look. Done. I began today. And now that's coming out 7:30, 8 o'clock. I mean, it's early. So I've made that change. And what do I do in these? Well, when I'm reviewing 40 charts, I'm talking chart action. I'm going to tell you what I think the pros are doing a lot more than I am what you're seeing here. I will have a chance to give you more technical advice and fundamental ideas, and I'm going to throw out trade ideas galore. Some will be right, some will be wrong. I do not walk on water. But the whole idea is not to follow me. The real idea is you. You have a trade idea, possibly, gee, I'm looking at the economy, I want to do X, I want to make this trade. What does Ira think of that? That's the purpose. And for the cost that it runs to take a look at this, it's really not much. It runs you 26 cents a day. You heard what I said, for 30 days to take a look. After that, you decide. If you want to be a subscriber, you can go on a yearly basis, $13 a month. You pay it up front, or you can go month to month, $15. But, why not give it a try? See if it's worth your time and effort. And believe me, not everybody stays, but the vast majority do. I hear from them. They claim they like it, and I do add ETFs, I add futures. If you had a certain stock or something, I'd throw it in there. It's up to you to be a subscriber. How do you do it? Go to our website, www.iraepstein.com. Under Education or Research, go under Morning Research, click it, away you go. I'm Ira. Thanks for listening, thanks for watching, and I'll see you.